Through my 30 years, ups and downs in the cycle. We don't know how long the cycles last, but this one seems to have all the fundamentals of a sustained rally.
Welcome back to VRIC Media. We're here with our next guest, Alastair Still. Alastair, tell us a little bit about yourself and your involvement in this conference.
Well, thanks for having me on here. Pleasure to be here.
Pleasure to have you.
I've been coming to this conference for more than 10 years, so it's very familiar to me.
Well, veteran.
And you've seen how times have changed. It's packed house today, which is great to see.
Isn't it amazing?
A lot of enthusiasm, lots of optimism in the precious metals. My background is I'm a geologist. I started working at mines in Northern Ontario, places like Timmins and Kirkland Lake, and spent almost 25 years working for major producing companies. Learned the trade, learned how operating mines worked, got into the mergers and acquisitions world, so I could see how working an operating mine led you into acquiring new projects. And then I even had a stint in mine building. I spent a few years in Argentina building a large-scale underground mine. So that gave me a good rounded background that led me to an opportunity called gold mining, which had a portfolio of assets waiting to be advanced and moved along. So interesting background in the industry, and I never would have thought 30 years ago when I started we'd be seeing $5,000 gold price, but it's certainly exciting times. I look at things from a few different perspectives. Of course, there's lots of companies here like ourselves. We're trying to get our story out, where we can create value for shareholders. But I also like to step back and look in the sort of the macro scale of what's happening. And what we are seeing is record prices near $5,000 for gold an ounce. Silver, over $100 per ounce silver. Copper approaching $6 a pound. These are levels we haven't ever seen before, never mind all occurring together. So it's creating certainly enthusiasm, and not that I'm downgrading that, but you also have to approach that with caution.
Right.
To talk to companies that you trust, have a background, have a history, have demonstrated they have the ability to function and deliver on results.
Yeah.
So I think that's very important for people who are attending this show, and there's a lot of people who are new and they're catching the wave and the excitement on precious metals. I think it's very important to talk to different people, try and understand, the key fundamentals of companies, and every company needs to have good assets and good people running it. You can't check those two boxes very early on, move on to the next company. We had some good keynote speakers this morning giving macro views on metal price, trends in the market. I think it's important to understand all these things, and it can be overwhelming. There's maybe a couple hundred companies here. So where do you start?
Over 300 exhibitions on the floor right now.
Oh wow, okay.
Yeah.
So that says there's a lot of choices out there.
Yeah.
So where do you boil it down from? And take a company like ours, like gold mining, and I think it's a great vehicle because it gives diversification and it de-risks the investment. We have almost a 500 million Canadian market cap company. We trade on New York Stock Exchange and the TSX, so we have dual listing. There's good liquidity, but we're not a single asset company. We have over 7 projects, each have mineral resources on them, countries throughout the Americas. But underpinning that, we have a very strong balance sheet. We have marketable securities, and we have cash on hand of some 350 million Canadian dollars. That was as of Wednesday this past week. I ran those numbers. So by its very nature, having a diverse portfolio with the cash and equities to back it up creates a vehicle that you can see growth in, but also has risk protection measures in there by the size and the scale of having multiple assets as well. We're at the resource development stage, so we're just starting to get into, we've announced that we have on company we own, for example, 76% in this US gold mining. They're underway with a PEA study, and that's a preliminary economic assessment.
Okay.
That's the first stage really from taking our resources and trying to show that there's economic benefits to a path to putting this into production. So we're at that stage now. We're putting PEAs together. From the preliminary economic assessment, or PEA, the typical steps are you go from there to pre-feasibility, then to feasibility, then into your production and development. It was the first stage of saying, hey, we've got the economic merits to move this forward, and then you usually can start multiple paths in parallel. So you might start your permitting. You should have already begun your stakeholder engagement, which is very important, and we have at our project. I like to say on day 0, you need to start stakeholder engagement, deal with your local communities, First Nations, all the important players in the communities that you're going to be operating. We're progressing from the exploration and resource stage to development stage. And the first phase of development, of course, is showing you have strong economics to make the project work. And with the strong economics, you show they have the backing to invest capital to build the project. I say the nice thing about our company is by having 7 resource stage projects, we have the flexibility to choose and be selective and focused on our best projects. And I was talking to someone the other day about one of our existing PEA studies on our project in Colombia. It's called La Mina. We did a PEA study there in 2023. And the gold price we used on that study was $1,750. You look in today's market, we're approaching $5,000, and most people are doing studies at a longer term price lower than that at some 3,000, 3,100 we're seeing. That's almost double what a study 2 years ago was done. So you can imagine the impact on the economics of projects using those higher metal prices. Yes, we're seeing inflationary pressures on the OpEx costs and the capital costs,
Right.
but nowhere near the rises we've been seeing in the actual value of the metal itself. Well, I always start with the fundamentals. And I think it comes down to a good decision or a good discussion about who's at the booth. You want to know who you're talking to.
Right.
We have, it's great, everyone has support staff, but go right to the top. If your company's serious, go see the CEO. I'm the CEO of my company. I'm here, I want to talk to people. Go talk to the person at the top if you can. And then find out what's their background. If they say they want to build widgets in Wichita, do they even know where Wichita is? Have they been there before? Have they done the work? Have they done that?
Yeah.
Do they have history of it?
Yeah.
Exactly. So you want to see what their background is. What's their track record? And it's like, people, they want to see people who have a history and a demonstrated ability to deliver results. That's very important. It was no secret or no coincidence, I should say. This morning, one of the earliest sessions, we had legends on the stage. You had, Rick Rule and Ross Beatty and Robert Quartermain. These aren't guys who did it one time. These are guys who've done it multiple times. They have a track record. Those type of people, when they have a history, they've demonstrated they can do it. Those are the type of projects you want to back that have the right team building it. So that's the first thing I would look at is the team who's leading the project. So the first step, I would say, for me, was find out who the team is, the people.
The people behind the project.
And then,
Ask about the team.
and then the second thing is, what about the assets? You can have a great team, but you may not have the good assets. And that may be more of a time thing, because good teams will find good assets. But if you can marry a good team with a good project, that's the combination you want. And that's a harder question to answer, because with a team, it's easy to say, oh, well, this person has done that, or this person has a track record. You can actually see it. Trying to understand how the project will perform is a little difficult, and especially if you're a generalist, to understand what does this project have. And that's why it's important to look at various analyst reports. And these are not necessarily the paid research, but the banks will often cover stocks, or there's investment banks and even the public trading banks will do analyst research. That's important to get a background where people don't have a biased view. They're covering multiple companies, and they'll have a view that you can let experts who happen to be geologists or engineers get their views if you're a generalist, to make sure you incorporate that in to decide, hey, these are good assets, good team, and if those good assets are in a good jurisdiction or good country, even better. I would say, this is an exciting time in this cycle. I've seen through my 30 years ups and downs in the cycle. We don't know how long the cycles last, but this one seems to have all the fundamentals of a sustained rally. Doesn't mean it's always going to go up. There may be ups and downs along the way, but I think there's still some strength in this rally. So it's get in, do your work, do your research, try and diversify if you can. Either that with a company has multiple assets or multiple companies with exposure. I don't think it's the type of market where you need to put all your chips on one number. So spread it around. Some people have some, I've always heard from people, 10 to 15% should be in physical metal. That's not a bad play either. But you get the leverage to that metal by having a company such as gold mining, which has a diverse portfolio, exposure to multiple projects, and a re-rate potential that can really have a substantial potential gains. The other question I've been asked here as well, should we be backing silver? Should we back gold? Should it be copper? My answer is yes. It can be all of the above. You don't necessarily have to pick or choose. And certain deposits, just the way they're actually naturally occurring, will have multiple metals in. Our portfolio happens to be about close to 80% gold, but we have copper and we have silver within the same portfolio. So you're diversifying by having polymetallic deposits, or certainly you may have a focus on gold, but you can also have exposure to the silver and copper as well.
That's a great point to make, is that hasn't really been brought up yet on our interview so far, actually. Yeah.
Because each one will have quite different fundamentals. Gold will have demand and supply, and there's central banks, and we had a great discussion from the panel this morning about gold price. Silver has its own fundamentals, and then copper is more of a traditional commodity of supply and demand. There's huge demand needed for electrification, AI centers, all that needs power, and not just generating power, but transmitting that power. So that's why the demand for copper is so high, and that's the fundamentals for copper are very strong right now as well, I believe.
Wow. Thank you so much. Where can everyone find you if they're going to look for you online?
Absolutely. You can find us at www.goldmining.com.
Good name.
Yeah, and the ticker symbol in Toronto is very easy, GOLD, gold, and GLDG on the NYSE American as well.
Wow, amazing. Thank you so much.
Thanks for having me.